What is up, guys? It's Mr. Fit to Flourish, and today I wanted to talk a little bit about technical analysis as I'm getting a lot of requests since I've been on TikTok for a little while and I've been making predictions every single day on where stocks are going and how far they're going to move and what levels to watch. And people are low-key like, yo, are you doing some type of like voodoo or something? Because your levels are super accurate. And I know a couple people, a couple traders who are really good at finding these levels as well. But I want to kind of break it down on how I find these levels, but really I want to show you how to get there from the beginning. So this is a little bit on the technical analysis side and how to get to that. So first, let's get to the very basics. This video is for beginners, okay? So I'm going to change this view up a little bit here and make this screen a little bit bigger here. So where do people trade? Let's just start off with the basics. Where do people trade? People trade on Webull, Robinhood, Fidelity, Moomoo, TradeStation. Me, myself, I like to trade on Robinhood. It's super easy to use on the go. I'm a pharmacist. I need to be trading on the go. Also, I do my charting in TradingView. Okay, so my charting is all done on TradingView. What is TradingView? It is a charting platform. It is a place where I can visualize different charts. Okay, so what does that look like? Well, that looks kind of like this. So I can visualize my charts on TradingView and look at price action here using Japanese candlestick charts. Okay, that's the very basics. Let's move on. So reading the charts. So up or down. Okay, up or down. We want to know, is the market going up or down? That's called market sentiment. This is the overall mood of the market. So is the average trader feeling like buying or selling? And you can kind of gauge this based on previous price action and what's been happening in the economy, in the markets. Like, has price been going up over the year or has it been going down? What do people feel like? Okay, you really need to understand that before getting into trades. And then we need to understand the difference between bulls and bears. So a bull can be described as optimistic, someone who's thinking that the markets are going up, and then a bear is pessimistic, price is going down. Bears are often associated with something called shorting, which means that you're betting against the market, you're betting prices going down. Bulls are longs, so they're longing typically, or they describe it as going long, thinking market is going up. Okay, so buying and selling. So to go long is to buy something, to short it is to sell it. Okay, understand this, and then understand the bid is the price a person is willing to pay, and ask is the price a person is willing to sell something for, and then the bid-ask spread is the difference between the buy and sell type of deal. Okay. Then we need to also understand volume. So small cap stocks typically have lower volume, while large cap, high beta stocks, growth stocks typically have higher volume. So it's going to be easier to trade amongst other traders because the more people you have in the market, then the tighter the difference between the bid and the ask price is going to be. If you have less traders in a market arena, then you're going to have a wider bid-ask spread. So someone might be asking, hey, I need $10 for this, and you're like, I'm only willing to pay $3. That's a huge difference in price. But then if you have a lot of traders in that market, then it might be something like, hey, I'm selling this for $10, and this person is going to be like, oh, I'll buy it for $9.99. So your bid-ask spread is going to be a lot tighter. All right, and then let's get into what does a chart look like. So this is what a chart looks like. We have red candles. Red candles show you in a certain time frame that price is going down. So for reading it from top to bottom, price is going down. Green shows you that price is going up. So each green candle is a session where price started at the low and goes up. Okay, what do I mean by that? Well, let's get into it. Let's learn about candlesticks. So a bullish candlestick is green, like mentioned before. At the beginning of a time frame, opening time frame, we start here at the bottom of this rectangle. So this rectangle part is called the body, and these tails, they're called wicks. Okay, so at the bottom of this body is the open, and then this flat part is called the close. And then this high, this top part of the wick is called the high, and the low, and then buying happens on this green bar. Now on this red bar here, we have selling. So at the beginning of the time frame, this opening session, we open at the top here, and then price goes down to this close. At some point in that session, we get as low as here, but we end up closing here. At some point during the session, we get as high as here, But again, we end up closing here at this bottom level, this flat part, at the end of the session. Candlesticks are formed and used to measure prices of trades in given time periods, okay? So then we need to understand trends. What is an uptrend? An uptrend is a total sum of a bunch of different time periods, trading sessions that add up to a upward sloping line, an upward trend. So we're getting higher highs and higher lows. So higher highs and higher lows. So price from left to right is moving up. Now a downtrend is just the opposite. A downtrend is bearish. So from left to right, price is moving down. We're getting lower highs and lower lows. Very basic things that we need to understand. Now this concept here is a concept that nobody talks about. Like, I don't know why people don't talk about this when it comes to trading, but it is trend versus non-trend bars. So trend bars are bars that contribute to the direction of the trend. They have bodies that are 50% or more of the entire bar range, end to end. And they help to decide where to enter trades. So trend bars are pretty big bars. Non-trend bars are usually pretty small. Now, what do I mean by that? So it looks kind of like this. So the trend bars are marked by these arrows. They're huge bars. And these big red bars are contributing to the downward push of this downtrend. Now, these little bars are non-trend bars. So they're super small bars, and they really don't contribute to any directions. Whenever we see these small bars, they go sideways. So when you're getting in a trade, you want to get in after a trend bar, okay? Because that's going to contribute to the direction of the trend. That means we have a lot of momentum, and you want to be getting in with momentum. If bars start to go sideways, you can't really gauge where price is going to go. Is it going to continue down, or is it going to move back up? You don't know. But if you get a nice push to the downside, like we see on these big red bars, then we know there's a lot of selling pressure, okay? Selling pressure. Then there are a few chart patterns that I wanted to talk about that are pretty crucial when you're first starting to trade. First being the cup and handle. If you see a cup and handle formation, which again is a cumulative pattern that forms after a bunch of different trading sessions. So you get this sort of a cup and then a handle, and then you get a rip to the upside. So you can pretty much predict, after seeing a cup and handle, you can predict that price will move back to the upside. And we can talk a little bit more in other videos about why that happens after this formation. But it's a little bit more advanced, and you'll need to know a little bit more about price action. Then we have these flag patterns. This is probably the most famous pattern for any beginner trader. They're like, oh, it's flagging, and it doesn't always pan out, but it's good to know. So we're moving to the upside, and then you have sort of this sideways consolidation forming a flag, and then you rip back to the upside. And then same thing for a bear flag, where we're going down, kind of consolidate, and then rip to the downside. So that is a flag pattern. And then there are pennants, which are pretty similar. And then a ton of other patterns to know. My favorite being the inverse head and shoulders and the head and shoulders. And these patterns kind of show you where price action will go. So really good stuff here, really good patterns here. And then we have micro double tops, also known as up-down bars, good signs of reversals. And then we have down-up bars, micro double bottoms. Then there's double tops, which are signs of a reversal. Move to the upside, we sell off a little bit, and then we move back to the upside. We have a resistance level, and then we sell off. That's also something I wanted to talk about, was support and resistance. So resistance is a level on a chart where price does not go above. Support is a level on the chart that price does not go below. This can also be described as supply and demand. So a supply zone is a zone which is a point between, or an area between 2 points in which price typically tends to sell off when it hits that zone, that general area. And then a demand zone is where price typically gets bought up once it hits that general area. And then something else to know in terms of price action are dojis. So dojis are trading sessions where the open and close price are the same or small in difference, which causes it to look like there's a large tail on each side, or just one large tail, because price is the open and close price are so similar. Okay, and then there's something called trend channels. So these are lines in which you include price action. So in a downtrend channel, we're drawing a trend line on the top of a downtrend, and the channel line will be on the opposite end. Now in an uptrend, the trend line is drawn on the bottom, and the channel line is on the opposite side. So in a trend channel, you include the highs and lows of all trading sessions in that trend. And there's more and more and a ton more stuff to learn about technical analysis, but we will save that for another video. Thanks for tuning in to this quick video on beginner technical analysis. We are doing a masterclass in the Discord on Sunday. That is going to be July 21st. So Sunday, July 21st, in our Discord, we're going to be doing a masterclass on technical analysis of trading, so that everyone can be able to predict what's going to happen in the market, or at least make an educated guess on what's going to happen in the market. So thank you guys for tuning in. It's Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.